Right now, Calgary is 50% cheaper than Vancouver and Toronto. 50%. You could buy this house and this car, or this in Vancouver. GDP growth has stagnated, affordability is way down, debt is high, and rates are awful. Bad news sells, but in reality, are things that bad? And is this going to affect Canadian real estate prices in 2024?
Realtors say two major groups of buyers
Canada could be sitting on the biggest housing bubble of all time.
Well, let's take a look at the data and find out for ourselves. There are a few things that affect real estate prices that we need to take a look at and see where the market's heading. Keep one thing in mind, when we are reviewing data like this, there is no Canadian real estate. Just like there's no Canadian weather. Every province has its own market, pricing, outlook, and variables. We've seen GDP growth hit a wall. Employment trends are tightening, which could be bad for housing. Most analysts will agree that 2 consecutive quarters of contracting GDP to be a recession. But the slowdown that we've seen compounded with the unemployment rate rise over the past 4 months is the largest we've seen outside the pandemic since 2008 and 2009. Since the 1970s, there have been just 6 periods where the jobless rate rose by that much in such a short time frame prior to this year. And 4 of those 6 were during recessions. Most of us think and compare recession to the last major one in the late 2000s, but not all recessions see as much fallout or pullback. But that doesn't really matter. Data or no data, consumer confidence is a key element when it comes to spending and investing. And looking at the index of consumer confidence, we aren't that confident. Prior to the past few months, this index has been this low only 3 other months. December 2008 and March 2009 during the recession, and April 2020 during COVID. And in over 20 years, we've never seen back-to-back readings this low. The pandemic did help majority of Canadians and Americans save money. There were less vacations, less commuting, and a lot less spending. Since then, household savings have gone down dramatically, but when we compare ourselves to our American counterparts who learned their lesson in the last recession, we are in a far worse position. Roughly 55% of the total mortgage stock outstanding will be renewing in 2024 and 2025. 1 in 6 Canadians that were surveyed said that they find their financial aspect of their mortgage very difficult currently. Well, this finally brings us to the good news portion of this video, especially for Alberta. Mortgage delinquencies are insanely low, and looking at how quickly rates rose, I think we're all pretty surprised. I don't think that this would be the case if rates stayed high for the next 2 years, but this does go to show how resilient we are. With the soft economic data getting hard to ignore, the bond market finally started pricing in the reality that we may be at the peak for the Bank of Canada this cycle. The odds of a hike in the overnight rate to 5.25 has collapsed from 90% in September to now less than 20% today. Markets are now betting that the Bank of Canada will hold until Q2 of next year before cutting and ending up around that 3.5 range in late 2025. But this could come sooner if the economy continues to worsen. That probably won't move the needle in terms of housing demand short term. Affordability is still super challenging, but with rates at these levels, it's important to remember that we don't need rates to return to 0 for this market to stabilize, and we shouldn't be expecting it either. Fixed rates were in the mid-4s this past spring, and the market was just fine. We have another 120 basis points or so to go to get back to those levels, but at least the fears of return of double-digit interest rates of the early 90s looks like it's off the table. Alberta isn't shielded from the slowdown in Canada's economy, but it continues to stand out. We're expected to rank first amongst the provinces this year in terms of growth, a spot that we've held several times in the past. We have seen a tiny dip from what was predicted earlier this year thanks to some crop challenges, but still pretty impressive. Now let's talk oil and gas. Alberta's kicking off the year with strong oil production despite some hiccups from spring wildfires. Investments are pouring in with new wells being drilled thanks to high demand and good prices. Fun fact, these investments have even surpassed pre-pandemic levels. Plus, Alberta's got this cool affordability vibe that's pulling in people from all over. Last year, over 45,000 people moved here from other provinces and nearly 100,000 international newcomers called it home. The population growth is soaring, matching PEI's pace, which is saying something. With all these new faces, consumer spending is predicted to jump by a whopping 6.4% this year. Sure, things might cool down a bit in 2024, but retail sales in Alberta are still expected to outdo the national average. So what does this mean for housing prices, especially for cities like Calgary? Our inventory has been trending downwards for 5 consecutive years while sales have been on the come up. And there's a simple answer to why we are seeing this. Compared to the rest of Canada, we are affordable. Like, really affordable. Rates have slowed down real estate sales over the past year, but the demand continues to grow. We're seeing a steady flow of people moving to Alberta. Fun fact, there are 9.1 people moving to Alberta for every one house that's being built. As people continue to flood Alberta for job opportunities and for the cost of living, the inventory crunch will continue to push prices up. But don't take my word for it, look at this map. We are 50% cheaper than Vancouver and Toronto. 50%. You could buy this house and this car, or buy this in Vancouver. Enough said.